Hey guys, Marcel Leblanc here, and I'm here with my colleague Mathieu Roy. Mathieu is VP of Equities here at Louisbourg, as well as the portfolio manager on the Momentum Fund that we manage for Assumption Life. So the Momentum Fund has had quite a run in a while. It has become a top performer, actually number one performer across all the way to 5 years, I believe. I thought it would be interesting to invite Matt and have a conversation about the fund, how it works, as well as what went well as far as performance goes. So Matt, welcome. Thanks for joining.
Sure.
So let's start there. Let's get a little bit of history about the fund, how it came about, why it was created, and maybe segue into how it's structured and how it actually works.
Sure. Well, at the core, it's a quant strategy.
Right.
So that's how the fund is built. The decisions are made. It's quantitative in nature. And really, it came about with observation, seeing that the Canadian market was very inefficient.
Okay.
So we backtested through time if using some momentum characteristics would create outperformance. And it did, and we created the fund.
Okay.
Really what it does, it captures short-term to mid-term themes in the market.
Okay.
And those themes could be anything. It could be energy, it could be gold, it could be being defensive. It really just captures what is in vogue for a certain period of time.
Right.
The fund's holdings do change frequently.
Okay.
It is concentrated in nature.
Mm-hmm.
We have 12 holdings.
That's it.
That's it.
At all times.
So it's not built to be your unique Canadian equity exposure.
Okay.
It is built to be a complement,
Sure.
and we attach it to a fundamental strategy.
Okay.
So for a lot of our clients, most of our clients, we would have a fundamental where we're looking at the value of the businesses, how strong those businesses are, the risk, and would have typically a lot more holdings.
Right. And it would also more closely resemble the Canadian market than the Momentum Fund might at some times, right?
Exactly.
Right.
So those 12 stocks really, they're an add-on to that fundamental strategy.
Okay.
So it could be very concentrated in nature. It could be very sector specific. Doesn't have to be very broad-based. And it's had quite a bit of success since inception.
Well, speaking of success, could you talk a little bit more about what has been going right, what cylinders have been firing more than others, and how the performance came to be what we're looking at today?
Certainly, and what helps the momentum strategy, and maybe talking a little bit more in terms of how it's built. It's momentum factors based on price over a variety of periods of time, which we've have found with our backtesting worked the best, but also in terms of business fundamentals. So how financial results are trending. So it's a combination of those trends that creates that formula. And what helps the fund have a great deal of success is persistent momentum in the market. So the longer this goes, the less the fund rebalances, the more those factors work.
Interesting.
If you look at the last couple of years, we've had large cap tech work quite a bit and for extended periods of time, where in certain cases, fundamental managers like us as well find it difficult to buy because we find these businesses to be expensive.
Right.
But that quant strategy will capture those short-term trends and we'll sell them once that ends.
Because it's following rules at the end of the day.
That's right. So over the past several months and quarters, it's been large cap tech and it's been gold and precious metals.
Sure.
And this has been relatively persistent. The fund is concentrated in those themes and it's worked quite well.
And it's actually worked out that it's pretty much contrarian momentum to the general market.
Exactly.
Right? So that's helped a lot in the past. Perfect. Well, I think that gives us a pretty good overview of the momentum strategy. Thanks a lot for joining us. Till next time.